All right, all right, all right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet here in the United States, the Wednesday before the Thursday Thanksgiving. We hope that you all are doing well. I'm your host, Benny Allen, along with my awesome partner, Mr. Ryan Carthage, and we definitely are all so happy and grateful for being here with us this evening as we take a look at the technicals and the fundamentals of the Forex market to see what we can take advantage of. So without further ado, as always, let's make sure we turn off any and all distractions. Grab a pen and paper, take lots of notes, especially our newbies, and let's make sure that we participate and engage. So first things first, as always, let's do that sound check. If everybody can hear me loud and clear, drop me a 1 in the chat and we can get things going for this evening's session. All right. Cool. So let me appreciate that. Exit out of here and well. Right. So let's talk about this. Fed considers slower rate hikes to be appropriate. Right. So Chairman Powell busted my dollar setups on the lower time frame up pretty good. Right. I get stop profited on some of them because I had adjusted the stop, thinking that we're going to continue long for right now, but it pushed it further down, right? The US dollar. So this is where we are. So a substantial majority of federal officials, okay, judged that it would be soon appropriate to slow the pace of Fed funds rate hikes as they evaluate the impact policy is having on the economy. Minutes from the November FOMC meeting showed still various policymakers viewed the peak rate as higher than before, right? So we saw the knee-jerk reaction in the market. So here's the bottom line. So when the Fed met in September and they put out their dot plot, they had the rate topping out at about I think it was 4.75%. Now it's anywhere between 4.75 to some Fed officials are calling 5.25 is where they're thinking the rates may top out, right? And then there's some rumors that maybe even higher than that. But I think max probably 5.25, which means we have a way to go in regards to rate hikes. So what's going on now is it's all about the talk of the pace of the hikes, right? So we're now, because of what he said today, all right, kind of ice skating, backpedaling a little bit, tap dancing all over the place, okay? Slow the pace. So we're thinking, what, 50 basis points in December, okay? And then maybe less than that moving forward. But the slower pace doesn't mean that we end up with ultimately a higher federal funds rate in the end, right? So in September, again, dot plot showed 4.75. Now they're talking upwards to 5.25. So maybe they slow the pace of the hikes so that they can evaluate the lagging effects, okay, that the rate hikes are having on the economy. So they'll have more time to evaluate those effects since they're lagging, okay? Just like indicators we use technically are all lagging, okay? So what does that end up? Do we end up with a higher rate at the end of the day because of that? So that's what everybody is trying to figure out now based on those FOMC minutes. So we did see a correction in the dollar, right? Sold off a bit. Reading some articles saying that they think that the dollar has peaked and they're looking at a downturn in 2023 on the US dollar. I'm not quite buying that yet. I'm not ready to go in that direction. But there are some varying opinions on that. So we shall see. I'm still not sold with a projection, right? Looking at the articles yesterday, expecting slower global growth, right? And further tightening. Recessions, the UK, hey, we're in a recession, right? Europe on the brink, right? Some people think they're already in one. So I'm not quite ready to bet against the dollar yet, especially as we've seen with supply and demand imbalances still. And there's actually been very little sign of inflation abating at this point, right? So I think that's why they're saying, hey, maybe we slow the pace to see right, what happens, because there hasn't been too much of a sign of inflation slowing when you look at all the various data points that they look at. Some signs here and there, but it's still a ways to go, a lot of work to do in getting that genie back in the bottle. And that's just not here in the United States, that's globally. So I'm not ready to call the decline and death of the dollar just yet, like some people. So don't want to be that drastic, but nonetheless, the news did cause a correction today in the dollar, and we'll take a look at the charts to see where we stand on some of those US pairs. And then also, we had a couple of newer members reach out to us asking about those 80-20s, more of a day trader, wanted to see, more of how that plays out on a 5-minute. So I do have some setups that went pretty good in regards to the 80-20 on the 5-minute chart. I know we spent the last week or so just looking at, support and resistance, breaks and retests. We wanted to make sure that we covered those lessons and get those on video for everybody who was wondering, kind of simplify things. But I will spend some time tonight taking a look at those 80-20s on the lower time frames. All right. So if everybody's okay with that, drop me a 2 in the chat. Let me know we're all good and we can get to work. Okay. So first, I guess today it wasn't all about the dollar, right? We got PMI numbers that came out. The euro saw, you had France, all in the Eurozone, Germany. Overall, slightly less contraction when it came to the euro, when you look at the PMI numbers. So contraction eased just slightly, but they still have a fall off in demand, okay, which really points towards recession is looming, okay. And I don't think next month with the ECB meeting, they're probably going to go 50 basis points, but I don't think they're going to get super aggressive with 75. So smaller, right, expectations in regards to interest rate hikes next month. I think they're definitely going to get it, but probably 50 basis points again instead of 75. I'm seeing a rally now, like the euro dollar rally, the euro versus the dollar rally mainly on the heels, well, slightly because of what happened with the PMI, showing slightly less contraction for the Eurozone, but mainly because of what happened with the dollar and the FOMC meetings. I just have a hard time with recession looming, war, energy crisis, long-term swing wise, right? We see the rally now, so there's day trading opportunities, shorter term opportunities there on the euro for euro longs, but long-term swinging, I have a hard time, not looking for opportunities to short the dollar on the higher, the euro on a higher time frame. So that's where I'm at on that. Australia's rallying a little bit, right? Rallies in the stock market, commodity rallies, but over the long term, again, on the Aussie, the biggest trade partner, China, back and forth with these lockdowns, easing, not easing, global contraction forecasted. So over the long term, things are rallying now, but I'm looking for those, particularly the euro and that Aussie, for those high prices to potentially short off the higher time frames for those lower time frames, for those longer term swing trades. So that's where I stand on that over the longer term for the swings on these. Nice rallies now being put in by the Aussie and the euro and the pound. The pound is rallying, right? In some areas, typically you see stock market rallies, you see the pound can gain some strength. So we're seeing that. But let's dive into the charts, and because I could talk about that stuff all day, kind of a market geek, but hey, that's me. But here we are. So this is the dollar on the daily. We got that slight rally where we got that swing low to form, then it's coming right back down to test that zone. So on the lower time frames, it looked, man, that dollar is selling off, but this is where we went right back to retest support. Okay, to retest support. So we'll see. We'll see what happens at this level. If it's going to consolidate, maybe range a little bit, which will make things a little bit tricky trading the dollar in the short term. But we shall see. We got a stochastic that's still in the buy zone. Price coming back down to test this support. So we'll see how things go on that. So we'll go to the dollar CAD, take a look at it. Now with the Canadian dollar, overall economy is not doing bad, but we know they're a commodity currency. And oil, right? Oil is taking a hit because of global demand fears for oil. okay, because of contraction, looming recessions, right, in multiple areas globally. So China, the lockdowns, major player when it comes to that oil game in regards to, purchasing oil and things like that. So oil is taking a hit, and so the CAD, right? You got the CAD that's struggling a little bit, but you can see here with the dollar where we just made a deeper correction because of the dollar news. All right. So that's where we are. If we come here and we look at that swing, where are we here? Like that, you can see how it's just dancing around a little bit, just ranging. Maybe we come back to retest this level at 132.99, but it's trying to make its round up. So a great initial push, almost ran right into that D extension, tap resistance, and we came right back down. So we'll see as the dollar settles back in at that previous support that it took off from, if we can get another rally. Okay, we got a stochastic in the buy zone there, and then your 1 hour wave, right, is just down. Right, we didn't get it. We didn't get the trend line breaks that we were looking for, and price just continued to drop off. Right, so it's always good for your additional confirmations if you're trading with a little bit more size, because look, right. So we just pulled back, didn't break that outer trend line, and we pushed right back down. So still within the AB boundary off the correction from the dollar, and now we're kind of just stalling, moving sideways. So now it's taking back 78.6% of this 100% move here. All right, so we want to continue to keep a close eye on that now because of, right, that bump up against that outer trend line and then that lower low that got created. Okay, we've got you've got your inner trend line action going, right? Because we've created, here was the low, here's the higher low, right? Then push higher, and now we've got a lower low. So you can see the wave, right? We've got this inner trend line created now. So we'll just continue to watch it, see what happens, right? With that dollar support on the DXY, that's where we are. Okay, so a lot of mess today, but we're still within that AB boundary, so we'll continue to monitor this setup. All right, if we look at the daily, you can see where we are, okay, where we're sitting. We've got a high forming here, right? So maybe we retest this support eventually, okay? Kind of hard to tell right now. We'll see what happens as we close out the week, especially a little tough being that we're going to have a little bit of a slowdown in volatility because of the holiday tomorrow. All right, so right, came back up to that 135 like we thought, but we didn't get that breakthrough. It's pulled back. Okay, so we'll see. We'll see what happens with that. Any questions on the UCAD?
No.
No. All right. All right. Okay. So we'll see. We'll see if this is a slight correction and then a continuation, or we're going to come back to retest. All right. Now, just playing the price action. If we break through this 132 level, then we're like, hey, we're moving back down to 129. I'm just, outside of the shorter term, day trades and things like that, take advantage of. I'm just, when we're talking about, I tend to look at things from a couple perspectives, right? The longer term swing perspective and my fundamental bias for a particular pair. And then there's the day trading aspect where it's just like, okay, do I want to take advantage of this short term opportunity at times, right? Now, from a long term, I just have a hard time going against the dollar. So if I'm looking at from a longer term swing perspective, I'm looking, if it wants to push lower, that's fine. I'm looking for lower opportunities, a greater discount to potentially buy the dollar. Everybody get me on that? Drop me a 1 in the chat. Right? So two different frames of thought. Okay. I just have a hard time with the tear that the dollar's been on, against most currencies. I just have a hard time going against the dollar right now from a swing trading perspective, right, on those higher time frames. So if it wants to eventually push lower, then we'll let it push lower and see when's the next opportunity to get long. All right, to get long on it. All right, but I'm not shorting the dollar right now long term. Okay, day trading is one thing, long term swing trading is another. All right, so dollar Swissy. Okay, come and take a look at the daily. Right, we just doubled right back over to this range. to the bottom of that range. Okay. Didn't get the continuation because of the fundamentals, right? We always say that there's no technical structure that'll stand in the way of a strong fundamental occurrence, right? So we didn't get a lower high and then a higher high. It just came right back to retest support. So you're kind of right back where you were before, right? So if you were long and you were making good money on that, you either out, you adjusted your stops in the profit, and you got taken out. I know I did, right? Got taken out on some trades, right? So it didn't necessarily lose money because it adjusted the stop, but right, didn't get the longer term targets that I was hoping for. So here we are, right? And we know now, I think that's the high. Yeah. So we should have another high of resistance here. Okay. So we play the same game. So we're retesting this support. Okay. Which is cool. It came back to this area, really, in essence, if you're just looking at the price action in this range. Okay. It becomes easy to see. We got to this level. Hold on one second. There we go. We got to this level and we reversed out. So now we've got to resist this level. So it becomes, it's one thing to have this impulsive move and then play that reversal. It's another thing now to say, okay, now I know what I want to see happen now, since we got that rejection. Right? So we want to see, right, this reverse. And now because of what happened at that level, you can be ultra conservative if you want to, right? And just let it break to see if it'll hold that level and then get long, right? And then if we push below and it finally breaks this area, right? So that's 1, 2, 3 touches here recently. If it breaks that area, then we're looking for retest to 93.82 and then a potential move back down. Any questions on the dollar Swiss? No. All right, so that becomes a pretty simple scenario there to pay attention to. All right, so we'll just let that play out. All right. Denise, question. Hold on. Hold on one second, I'm coming to you. All right, go ahead.
I'm sorry. Do you remember what you said just a minute ago? Do you remember you said no technical something can outdo the fundamental?
Oh, yeah. So when we that's just what we say, right? It's true. There's no technical structure or really setup that'll stand in the way of a strong fundamental occurrence.
Okay.
Because when you get strong fundamental data that comes out and it causes that emotional type reaction in the market, a lot of times it'll just blow through levels. So you may have a level and an idea in mind of where price may reverse, but when you get a lot of money on one side of a trade, it's just going to blow right through it a lot of times.
Okay.
Right.
Thank you.
So that's what. Yep. You're welcome. So that's what we mean by that. That's what we mean by that, because the technicals are the catalysts, right? Are the catalysts. So we have our footprints on the chart, but when you get price really moving in a particular direction and you get those emotions coming into play, then fundamentally the fundamentals are going to play out on that all the time.
Okay.
You know, but you see how being in tune with what's going on fundamentally can give you some ideas. Like, so you see how, right, that's impulsive, right? You see how many candles it took to move up to that level,
Yes.
and then it's just boom, right? It came straight down, right? Today it came straight down. But look at where you're having your challenge at again, right? At this 93.82 level. Okay. So when you're down in those lower time frames, you want to pay attention. Okay, I'm at this level. What do I want to see happen? Right. And that's what you do as a trader. That's it. Right. That's it. So just let the market dictate. But this is clearly just ranging. This is choppy.
Yes. Okay.
It's choppy.
Thank you.
But it's a wide range. You're welcome.
Yeah.
You're welcome. All right. Great question. I learned, you say, Jeremy, you learned that lesson yesterday. You want to talk to me about it?
Yeah. Basically, I mark on my chart, I think it was NZD USD. And I found a double top and kind of a little bit of like a swing high, and I realized that I can go in the trade before the rate hike.
Yep.
On the NCD, yeah. So I
Yep.
entered the trade and later realized that the NZD pushed up, and I'm on a drawdown now. So
Okay.
yeah.
Okay. You had your stop. You didn't put your stop above the high at a double top.
I did that, but I always set up my stop loss wider. So yeah,
Okay.
I'm still in the game. Yeah.
Okay. Okay. So yeah, it's all right. You know, it's all right. Because your risk management is good, right? That's the key, is having your risk management intact, because it's not, you can't predict it all the time. So here's where I'm at with it over the long term. Like, these pairs are rallying now, but I have a hard time buying into continued rallies on commodities when you're projecting recessions and contraction. You get what I'm saying? Because contraction, or when you have contraction, it can lead to less demand for a currency. I mean, for a particular commodity, right? So that's typically a weaken a commodity currency, right? Because then it puts you in kind of a risk-off situation, and they usually don't do well. So it's rallying now, technically, right? We saw already the rally started on this, but right, I just from a longer term perspective, like, you see where we are, right? You see where we are. So here we pulled back just beyond the 382, and now we're rallying, you know, but I'm still, from a long-term swing perspective, still within my AB boundary, well within it. Maybe we come back if it gets above these levels and closes and retests back to 64, right? To retest that high here, you know, and then we look from there. But I just have a hard time like over the long term thinking like, man, it's going to continue to go on a bullish run against the dollar for the next forever. I'm not buying that. I mean, you can see the rallies happening. They happen, right? Here's a rally here. So here was a 456 pip rally off the boundary, you know, 386 off the boundary, you know. So it's money being made in both directions. And just from swing trading, I'm just like, even once it gets up into this zone, I'm looking for short positions. I'm looking for short positions, you know. But it was a beautiful 80-20 play on the 4, right? That's gotten us to this point, right? That's gotten us up to that level, right? If we recall here, see, you see how it's coming right into that zone. So I see where you try to get short in this area, Jeremy.
Yes.
Yep. And sometimes, especially when you go back and you look in your charts on trades that you missed, sometimes, now you're in drawdown in this one, you're not out of that trade yet, but, you know, say you had your stop up above this double top, right? That, hey, can't be mad at that. You actually did get a drop off, right? You actually did get a drop off there that was pretty sizable. Okay. Right. And then with the fundamentals and everything today and yesterday, right, you can see it just reversed and it wanted to push higher, which is putting you right up around that 61.8. Okay. So, you know, sometimes you'll look back through your records, you'd be like, man, I was right on that trade. Ultimately, I was just early. That's all. You know, so like right now, you're just early, right? But you can see where it's up into a pretty good zone. We'll see how long these rallies last with these commodities. Okay, there's that 64 there at the 86, right? So it'll be interesting. Okay, some people are still long off the 80-20, right? Because that's putting you at TP2. That's just coming into TP2. So if you played the swing off the bottom, okay, we always have 2 scenarios, right? Okay, you don't have to win all of them to be successful. So there was your 382 there, and then here's your 61.8 that is coming into. Right. So if you're playing at 80-20 and you're still in, I know a lot of people only hold to the 382, but if you still have some position left, right, we got to retest and then it's just continuing up. So you would just now be coming into TP2. Right. So we're running into a zone, Jeremy, where's your stop?
Yeah, I think I set it a little. I'm not on my chart now, but
okay, I got you.
Yeah. So I can't give you a concrete.
It's all good. So we're rallying, right? So if I'm a 4 hour and I'm a trend trader, I'm like, you know what? Well, this is rallying right into my sweet spot. Okay, if I'm looking to roll with the trend, hey, this is rallying right into my sweet spot. I may be looking to get short. Now, in times like this, you know, definitely give yourself, if you're not limiting in small at these levels, right? Always trade small when you're doing limits and things like that. But if you're not, then you just deploy your trend lines and wait for some lower lows and lower highs to get in on that, right? Because if it does start to reverse and wants to make a C to D push, okay? If it wants to make that C to D push, then we all know based on the projections to the extension, you got time, right? You got time. So just let price do his thing. Just let price do his thing. See? Okay. So we know we've broken these now into the zone like that. And now, okay, just let it play out, right? As it pushes right up into that zone. Look at that. Okay. May see a reaction there. Okay. So we all can lose some battles, right? But you want to win the war ultimately. Okay. So always think about that. All right. So there. So that's coming up into that 61A zone. So for a larger potential play, okay. This, like a big monster swing, if you wanted to play that, right? We're at that 61A, which will put us at a TP here, okay? Down around this zone, like that. So now you're looking at, all right, a 4-hour chart trader, then this is potentially going to be my setup. I get my confirmations. I like this zone. My bias is long the dollar short. We're just in a correction phase right now, which is cool. You need things to happen to get the price action and get overall price to a high price. Okay, that's just the ebbs and flows of the market, just like we see here, right? So this is your type of setup, then that becomes your play, right? Like that. Okay. All right, so you look here, hey, I'm in that sell zone, stop 340, okay, long-term swing, 340 on the position, and now, okay, all right, call it 916, something like that. Right. And that's how you look at those type of setups. Right. So almost a 3-1. Like, what's that? 2.6, almost 2.7, something like that. But that's the longer term swing play, like that. That's how that would work out. Okay. So if you go back and you look at your charts, right? That was a 388, 382. That went to the extension. Okay. If you trade off the 382, you're not going to put your stop above the A, you're going to put it above the high. Okay, if that's your type of play. Here you can see where this rallied. Right. So you don't have to look far back to see that it occurs. Right. So we came right into this 61.8 here. Right. 61A above the A, 219, call it 220. And you got almost 700 pips to the D extension. Okay. So it all depends on what you like trading and what you have the patience for. All right. But if you put yourself in enough good positions like that, you'll come out on top in the long run. Not even counting your 80-20 play back to the 382. So that was a monster too. Right. So out of to the 382 was 464. Right? And then where you got in to take that one. And that was just to the 382, not even to the 61.8. Okay. So off that 127 up to that level is over 600 pips. All right. So that's that. That's the NZD USD. But hey, Jeremy, you're in the arena, right? And the credit always goes to the man or woman that's in the arena. All right.
Thank you.
Yeah, you're welcome. You're welcome. Got to jump in there. It's the only way we learn. Good job. All right. So that's the NZD USD. Any questions? No. All right. All right. Let's take a look at this UJ. What's going on? what's going on here? I didn't get a chance to look at the damage on this, right? So we just doubled over. That looks like the DXY, right? Coming right back down to retest that 50. Okay, stochastic still pushing up out of the buy zone. All right, but you can see where fundamentals, boom, it just throws it off. Stochastic in the buy zone, we're pushing down nonetheless. So we'll see what type of momentum it has once it gets back to the support, if that's what it wants to do. Okay. All right. So the thing is if it does want to keep declining, then you start getting price to get pushed into your buy zones on your higher time frames, which isn't necessarily a bad thing. It's not necessarily a bad thing, because now you got some good longer term swing players to take a look at. All right, so I want to take a look at the Euro USD. See where we are there, right? So here we. So we were thinking about that this morning. When we took a look at it, right? We've got that 382 there. So I'm thinking, see how we've got this 382, right? In between the 382 and the 50. And you see how it did break out to the extension right there. And it just held at this monthly support, and then it pushed higher than that last level. A lot of times that's when you start to get those longer term harmonic plays. So you can start to look at some potential targets, right, for it to play out. So this is that classic fight between the bulls and the bears within the 80 boundary that we talk about. Look at how this momentum pushed, and you're thinking, you know what, that's probably going to ride to the D extension. We stalled out at monthly support at 95.40, and now we're returning for a higher correction, okay, which is cool, right? So we can start to think, hey, where's our projection? So even if I ran the smart fib, right, kind of shallow retracing right now, maybe we get up in that 80-20 zone, right? Pull us in that zone there, put it right here, good confluence with that 786, and then maybe it wants to turn over, but it's just dancing around right now, right? And it's rallying. So we'll continue to keep an eye out on this Euro USD, right? But what I'm hoping is, hey, I'm getting a rally to a high price on the daily chart, right? Which is where I really like to play those big, huge swings. Okay, so we come to the 4. What do we have on the 4? Did it take us out? Yeah, should have took us out on the 4. So we're just climbing. Should have took our fib levels out there. But let's see. I believe it did. So I had those fibs running to the upside. Yep, took it out. Just took it out right there, right? And that's because we got a deeper correction going on the daily. But you can see we're way overbought. We're at 100%. Okay, so we'll see where that momentum takes us. If it wants to climb higher in the zone, that's fine. That's fine if it wants to do that. Okay, let it go. Right, let it go. See what happens when we get to these levels. Right, use our confirmations. Whether it's a cloud, trend line breaks, or whatnot. Let's see. Set this 104. Right? Maybe it double tops and starts to turn over from there. But let's just be patient with it. Any questions on the Euro USD? Good rallies with the Euro and the Aussie. Good rallies. No. All righty. So I'm gonna take a look at this Aussie dollar. All right, you see it? Look at it just pushing, right? In that zone. That's a beautiful 80-20 swing. You see how it plays on all your time frames, right? That's signal to get long, at least to the right. It got that from. Well, look, we're looking for that rally, and then we're looking for price to turn back over, just like it did here. You had an 80-20 here that played out, pushed all the way to the 61.8. Okay, so that's your framework. Okay. It goes down, down, down. Then you get your rallies up, 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 down, 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 right? So we came right back up around the 61.8 zone. So then this becomes, right, our levels here. Like that. And then we came right back down to this D extension. Like that. See? Okay. So you had a play here. All right. 230, 618 to the D extension, right? And that's a daily move that occurred. Okay, so you don't have to go far back to see the sequence plan out. All right. So we just have to be patient, and it takes a while to build that type of tolerance for them, right? But we all can get there if that's what we want to do. Some of us may not want to do that. All right, but that's your swing play, right? These are what we like to call your wealth building plays, right? over a longer period of time, right? Then you can get down to your lower time frames, right, to look for that income, right? That more of that regular income. These take a while to play out, right? You can just compound them. Okay. So if we come down to the 4, see where we are, right? It's just moving on up. Look at that. Right? Just moving on up. See where we are. Took it out, right? Because we're getting a higher correction on a higher time frame. That's all right. That's all right. Here's the swing. Look. Right, look at the swing. It just continued. Just continued. Didn't give us the pause at the level from the 4. That's all right. Right? Because we know how to play those too. See? See that swing? Yeah. And you guys will figure out and determine what you like. We got an initial move reaction here, right off that 61.8. Okay, you have some sellers coming to the game for over 200 pips, exactly, right? So we just didn't get that. It just wanted to continue. It's just entered a correction, and the momentum shifted. All right, gotta love price action, especially when you learn how to frame it out. So now this is pushing long. Bang. Okay. So we'll see if it wants to take the ride to that extension or not, or if it's going to hold up here at this level and double top. We shall see. We shall see. Any questions on the Aussie dollar?
No.
All right. So let's go down and look at some of these other these setups here. So I know one was on the 5. See, look. Okay. So for our newer players, when we're looking at the 80-20s, right? You saw it on the daily. You saw it on the 4. It's the same thing. It's no different in what you're identifying. Here's a shallow retracement, 118, 127 zone, and there's the break, right? So if you like tighter stops, okay, trend line works fine. Okay? You can use the cloud, but a trend line works fine. That's why we're really pressing the training on how you draw your trend lines properly. But if you see here and you want things to be tighter, okay, and shorter term, right? Here's where you place your stop. You use your confirmations. You're gonna place your stop right below that low prior to your break, just like that. Okay, just like that. And when you come out of this sell, first of all, does it get to my zone that I like to see price reverse? Yes, it came down shallow retracement, less than the 382, and it came down and it tapped at 118, and that's up against 4-hour support too. So that was beautiful. And then you got your break, bang. Okay, you got your break long to the 382. Okay, so if you get in somewhere off this trend line break, there's your stop at 22 pips. There's 44. Okay, and then it's just on and running, right? So 44, that's a 2-to-1 pretty much. And then you have 74, 75 pips, and then it's just still running, right? But you identify the reversal, right? I don't know about you. Every time I see that, I think it's pretty cool, right? How that same pattern just continues to show up. Right? Brandy, the market, the world is still going. Currency is still going to be moving. You won't have banks open here in the United States. And I can't remember if the banks are back open on Friday or not here in the United States, but it's global. It's the Forex market. So the charts will still be moving. Charts will still be moving.
Excuse me, Benny. I work for a bank, so yes, we're open on Friday.
You're open on Friday. Thank you. Appreciate it. So we'll be right back rocking and rolling. The money will be moving. Thank you. All right. So there we go. So there's that reversal. Appreciate that because I definitely was not sure. So there's your break. All right. So everybody see that, right? Take a screenshot if you have to. It's like sometimes it's just seeing it. Right? It's just seeing it. See that? You got to see it. So the more you see it, the more confidence you build to pull the trigger on it when you see it. So look here, right? Here's your AB boundary. That's a 236. Here's your 382. Look at where it pushed down. Found support and reversed. See that? That's what you want to see. You see even here, and just maybe it just wicked that 382, but you see how it pushed down and then it came right back up, right? To tap it, right? Consolidation, it broke down. Look at the zone, especially when you got good structure. That's a daily support level. And look at that push. Okay, so that's what we're talking about. That's that classic move, right? That signature 80-20 move, right? That we discovered in the market, right? When you talk about your trading sweet spots, this is it. Right there, when you're talking about trading to that counter move. And then we know that, right, if it rides long enough, it has the possibility of being a trend reversal. Okay, but you don't even need to hold the trade that long to be, to find success in the market. It could just be from the trend line break to here, right? If you can get in the habit of doing that consistently, you can do very well. All right, because now we've taken out this A, right? So this is my A. All right, so just think about it. Let me escape here. So this was my A. Think about how a wave usually goes. Okay, this is my A, my B. If my trend, if my price sizes are going to continue to trend in the downward direction, I'm gonna find my C somewhere in here. Right? We didn't get it. We didn't get it. It took out my A. Right? So now, if I'm just playing around on my chart, okay, and now it's taking out my A. If I just want to sit on one chart, I can do that all day. All right. So now look, here's this AB boundary. Here's this zone. Okay. So, and this is just on one chart. This is playing one chart. Okay. So if I see that happen again, right, like so, okay, I'm thinking, well, might be a possibility for a correction play. Like that. Boom. Okay. Potentially back down for the correction. If you want, hey, I'm big on trading with the trend, then you let that get into your buy zone. That's why when we posted that new AB boundary and that setup, it said you got two options here. The AB boundary represents the reset. So you can look and wait for price to get in this zone and get short for the counter trend, right? Or low price, hey, I think we're going to continue to trend upwards. Well, when it hits your sweet spot, then you have an opportunity to get long. Okay? Just like that. That's just playing waves on one time frame. Bring your levels down, right? So you know where you are, and just play it on one time frame. Everybody follow me on that? Drop me a 3 in the chat. Just know where your zones are and be consistent at it. That's one time frame, one chart, the 5 minute. Boom. Okay. And you could play it like, you know what? I only want to take my if your only signature play is I'm playing 80-20s and I only want to take it to the 382, to take it to the 382 and don't worry about the rest of the price action until it gets in a situation where it's another 80-20 setting up. If that's what you like to trade, no matter what the direction. You guys see how cool that is? So look here to the downside 80-20. Now, if this would have pushed up like so, okay, if we would have pushed up into this zone and then got short like this, boom, and hit the D extension, okay, then you would have had, okay, think about, you would have had your A, your B, your C, and your D. Okay. So in that scenario, what happens? Well, I tell you what happens. When that D gets hit, it's going to form a low, and it's going to give you a new down AB fib. Right? Just think through this with me. It's going to give you a new down AB fib. And at that point, you're like, well, I got this new down AB boundary. Right? Got me a new down AB boundary. Well, here's my A. Here's my B. Now it's just a matter of what does price want to do? Well, I already know if my sweet spot is that shallow retracement back down to this zone. Well, I'm just going to draw my trend line and put my cloud on there. And if I get the break, there's my setup again. Over and over and over again. And if this is the only zone that you're looking to play, right, that 80-20 play, then you know what? If it reverses off of this B boundary, okay, just go. It's only a few scenarios, right? Okay. So it's like this. Like I was in sales for a long time, and we were always taught like there's really only 6 objections a client can give you. If you master how to overcome the 6 objections, you're gonna have a high close rate. You guys follow me on that? It's the same. It's the same thing when you learn how to frame out your charts, right? And you know, right? And you develop a trade plan and what you're looking for. Right? So I know when this AB boundary form, okay, if I'm saying, hey, I only want to trade one setup, my signature setup. Well, if the scenario becomes AB boundary forms and it reverses immediately, well, that's not my play. I only like to play 80-20. So I'm gonna let that go. And I'm gonna let that finish out. I'm gonna go look for another pair. I'm gonna let that finish out. But if it makes an ABCD wave, guess what? I got a new AB boundary. And I'm gonna look to see if it gives me my setup. If it doesn't, I don't trade it. Right? If it reverses and it picks out my A, then I'm gonna draw that fib the other way. Bang. And I'm gonna see if it gives me my setup. Right? And I'm gonna play I'm gonna draw my trend lines, whatever you feel comfortable with, right? Taking a trade. Now, no matter what your confirmations are, you're never gonna win 100% of your trades. So you could put a trend line, 9 moving averages, a MACD, a stochastic, and whatever else is out there, a cloud. You can have it all on your chart. Not gonna win 100%. All right, not gonna win 100%. Okay, no matter how many confirmations you have, we don't control the market. Okay, so right, we just want to trade the areas of highest probabilities where we have success. Okay? You as an individual where you have success. You can't take it from me or Ryan. Right, it's where you guys find the most success based on your trade psychology. We're saying, hey, we like this setup. Okay, so if this comes here, makes a shallow retracement, hey, and we know there's times where boom, it gets impulsive, it's going straight to the D. Man, I didn't get that zone. Well, that's all right, because eventually a new AB boundary is going to form and you have another opportunity, right? That's why you see it so much. So if we go and we take a look at that was another one that was played on the, I think it was the Aussie Swiss on the 5. Okay. All right. Look. Here's my A. All right. Here's my B. That broke. Broke the B boundary out there, shallow retracement, came into my zone. Right. Just like that. Okay. Right. Bang. Trend line, outer inner trend line, straight through, right? Your lowest point without going through your candlesticks. Boom, that's where it was. So I broke it. I tapped my 118. I got a trend line break. As a matter of fact, okay, that's a classic here. See that? I have to react to that. Hit my level. I know what my plan is. I'm putting my stop below that low. Boom. Okay. Putting a stop below that low. Trend line break. Look, that's an official look. 2 to the left, 2 to the right. That second candle is a bullish engulfing candle. I'm buying that. Right? I'm buying that. Okay. Just like that. Boom. Right? Just like this. I'm buying that. Now, you could say, I'm either going to take it to the 382. And look, just know that these are levels, right? You see how that's coming in line with structure at 382? You're 61.8. But you can be, right, and in the outer trend line trader, these are levels. There's going to always be support and resistance levels that price has to work its way through. Now, you can respect that and reduce your position to get out of the trade altogether. Hey, I'm to the 382, I'm cool. Or you can set yourself up and say, well, over time, I at least want to be in a 2 to 1, 1.5, right, to 1, right? If you want to play that game, then do it, right? So if this is my entry, this is my stop, right? Call that 10 pips or whatever. I need 20. I need 20, right? We'll call it 20 at this high. Set yourself up. Right? If you want to be in a 2 to 1, that's your thing. I want a 2 to 1. Right? For every dollar I risk, I want to make 2. Oh, you got it. Right? You got it. So visually, if it helps you, that you're that type of trader, I use my fib to get me to my reversal zone. Right? Now, boom. I'll eliminate that. I just want to be in a 2 to 1. Right? Do I get it? Yeah, I got it. Right? You got 3 to 1 on that. However you want to do it. Okay. So you don't have to be so beholden to, right, that fib. Those are just levels, right, that you can make plays on. Maybe you want to take profit there, maybe you don't. If you're just a 2 to 1, boom, I'm in, I'm in a 2 to 1. Am I going to win every one of them? Nope. Is everyone I'm going to give me exactly 2 to 1? Nope. But if that's your framework and your trade plan, then go for it. Go for it. If you want to go 3 to 1, be willing to hold. Right? Set your trade plan up. I like 3 to 1. So what happens when I get to 2 to 1? Do I move my stop to break even? Do I take half off the trade at 2 to 1 and leave the remaining in there for that 3 to 1 move? Okay. Just think your way through it, right? You guys are going to become experts at getting to your reversal zones. How do you want to trade it consistently? All right. That's the key. So that's an example of a 5-minute swing on the Aussie Swiss.
Benny, just a quick
Yeah.
question. By identifying your stop loss, it was, I think, 10 pips below that swing low.
Yep, you can. You can, or you can put it. Some people like it tight, right? Some people like it tight, and they're gonna put it right there, Jack, right up underneath there. You know, some people go 5, some people do 10. It just boils down to, okay, you know, if I'm trading like this on my lower time frames, especially if you're saying I'm at a 2 to 1, the more I widen that, right, the further that price has got to go to meet my criteria. You get what I'm saying? So if this is, say this is 10 pips here and I need to get 20. Well, if I put that out 10 pips outside of there, right? Now that's 20 pips for my stop, for example. And now I need to get, right, for a 2 to 1, I need to get 40, right? Something like that. Right? So the wider the stop, if you're playing like 2 to 1s, right? So that's 20. So if my original stop was 10, if I want to go below that, you know, 10 pips below that, that's 20 pip stop. If I'm gonna be a 2 to 1, right? Now I got to get 40 pips, which you would have got on that, right? But that's just something to think about. Get what I'm saying?
Yeah, I do. I just wanted to ask, how do you use the ATR to
the average true range?
Yeah.
Yep. So when I'm swing trading, sometimes I look at the ATR. So I just automatically know that, like on the pound pairs. So when you look at your average true range, it's just telling you, right? When you look at an average, right? So if we come up, so some folks will use it and they'll say, on my swing trades, if I'm swinging, because think about it, if I'm swing trading, I know there's going to be pullbacks and corrections, right? So if I'm swing trading, for example, and I'm making ABCD waves, well, I know this is going to pull back, right? If I know that the ATR, say on a pound dollar, is 126 pips, right? When it's really moving, I'm probably gonna keep that stop wide. I'm not gonna be so quick to move it, right? Because say it's 150 pips. Well, that means that thing might move 75 pips up and then move half of that back down, or maybe even 75 pips. You know, you get what I'm saying? So you can't, if my ATR is super high, I may not want to use on my swings, super like, or move, say for example, I might start it out wide, but then I don't necessarily want to, as soon as I get in profit, move it super tight and move it into profit too fast, because it's 150 pip ATR, which means it can correct quite a bit before continuing long, right? So some people might say, say for example, so that's one way you can look at it, right? Just know, hey, I don't want to tighten too fast because this pair really moves, and the average, it's an average, right? Your average true range, right? So it may go up 150 and then come back 75, right? So if I got my stop within 65 pips of that correction, it's going to take me out, right? Now, another way people might set it is they might say, hey, I'm entering here, okay? And say my ATR was 50 pips, we'll make it a round number. And I enter here, they may say, I might make it, 2 times the ATR. So 100 pips on the stop, right? So sometimes it can help you with your stop management and placement. Okay. So that's another way that you can do it. Sometimes people say, I'm gonna put it at 1.5 times the ATR.
Right? Yeah. So for example, the AUDCHF, the ATR is 214.
21.4 on that. 21.4. Yeah. So you might say, if you enter a trade, you might say, I'm gonna do my stop double that. So 44 pips. Call it 44, 45 pips or something like that.
Okay. So
because
just how do you arrive at that 21.4? Because the numbers there is 0.
Yeah. So just knowing it by the way I was taught, like in the math on it. But when you look at it like so here, let's do it like this. Okay. And it's 20 days. So what is this? Right. See, that's 49. See that? Right. So you're looking at a 20-day average. So here's the day. This is a daily encapsulation. You see it?
Yes.
Right? So you're looking at a 20-day average on that, the way this is set up. So you see here like 57, right? Averaging. So you have some small days. See how that's 39, 44, right? Back here, right? So that's how they're coming up with that number. Right. So you have, when you look at your days, right? You usually have, how do they say it? You usually have, I want to say, when you look at 20 trading days in a month, the way it was taught to me, you'll have 10 days where price is moving right on average, right? In regards to its price action, to its range. And then you'll have days where it's trending above 5 days. And then you have 5 days where it's trending below, right? And so then that comes out to your average. Okay. So if you go to something like, this is the pound, right? And we'll look at it 1 hour right here. You see this right here on this daily, right?
Yeah.
That's 181. All right, because this one I think I got my setup on a I want to say I got it on a daily. Hold on, for my ATR. 20-day. This is set up off the daily range, 20 period. If I remember correctly, the way I got this set up. So, right, you see that's 181 for the average. So if you look at it and you put your daily encapsulation in on here, I have to do. It's the weekly. Encapsulation 204. This daily. So you see that 257? You see how that's moving like that? Right? 17. Right? You see your range, how there's range in there? 84
Yeah.
or 91 or whatnot. So that's how you come up with that calculation. So I knowing on my pound pairs, right, that they move, right? They're volatile pairs compared to like a Euro GBP, for example. So you can set that can help you to understand, like, you know what? If I'm swing trading, I'm using wider stops, right? I'm using wider stops on that. I'm not gonna use tight stops if I'm swinging, right? Now, when we're down on these, where was that? On this, say this Euro Swissy, right here. Right, like right here. Okay. I'm not worrying about the ATR on these type of plays. You get what I'm saying?
Yeah.
At all, because this is a 5-minute chart, is like boom, right? I'm in here, I'm taking it for whatever my game plan is. If it's a 2-to-1, if it's to the 382, I'm taking it. So that's not going to apply. My ATR is going to apply mainly for me on my higher time frames and my swing trades, right? Because
Okay.
I've got to know that, man, this pound 150 pips, like that one 181, the range, you know. So for example, it may go if the range, it may go 100 pips on a pound pair, and I know you guys have seen it, and then that bad boy can retrace 60 pips. You follow me on that?
Yes.
Yeah. So it may retrace, and I'm in a swing where I'm like, I've got a 350 pip target. Right? I have to give that trade room to breathe, because I know there's going to be days where it's just a correction day on that swing. That's just a correction. It's going to be a day where price is just corrected for the whole day. But I can't, if my target is 350 pips away, yeah, today it pulled back 60 pips, 65 pips. But that's well within the range. I know that. So I'm not going to have a stop that's too tight, because then it's going to stop me out before it reaches its maximum target. So that's how I've always used that. On these plays here, this is like right there, that bullish engulfing that broke that trend line. It's hard for me not to take that. Right? It's hard for me not to take that. Right? That's just, this is it. Playing around down, different mindset. Different mindset. Right? This is not okay, I'm waiting on this to you know, push up 60, come back 35 to 40. You know what I'm saying? So that ATR, when I'm playing on these levels, it has no meaning. This is in my sweet spot. This is my zone. I'm rocking and rolling. Right? Risk to reward. I'm in the setup. Like this. Okay. I'm in there. What is that? Well, that's 8. Call it 10. I'm going for 20. Did we get it? Absolutely. See what I'm saying? Different thought process. All right.
Okay.
Great questions on that. Great questions on the ATR. So I don't primarily pay attention to that when I'm down on the lower time frames, taking these 80-20s and these breaks like that. Nope. Well, great question though. So that's a Euro Swissy 80-20. That played out. Oh, you're welcome, Denise. That's a great question he asked, right? That ATR, because it does help you in those swings. Because I've been in some where, especially back in the day, where it's like Man, I was just up 200 pips. Like, I'm up 200 pips. I moved my stop up too tight, not realizing what the ATR is for a pair. And if you don't like using the one that we have here daily, you can look those up. You can Google that a lot of times. There's different sites and stuff you can go to for ATRs on pairs. I think a lot of them are current too, like they keep it up to date. I have to find those sites again, but you can look them up. If somebody does that and they got one that they recommend, let me know. We can share it with the group. But there's all different places where you can track that stuff for free too. If you don't like that, the way that's my mentors, the way they had us get that set up. If you don't like that reading, all ATR readings aren't like that. So, there's other options out there, but that's important when it comes to longer term swings. Like, man, I'm up 200 pips, move that stop in the profit, and I know, like, man, this target is 400. I'm up 200 right now. I'm going to adjust it, but I moved it too tight and got hit. So keep an eye. That's why you want to pay attention to the ATR. But this right here, that's a beautiful play right there. That's a bull candle that broke trend line and closed, right? And golf candles, right? You gotta take that. But these are small stop outs, right? They're small stop outs, depending on the size of the
Hey,
account.
Danny,
Yes.
this Joy.
What's up, Joy?
Hey, it's a feature on TradingView, and it's called ATR Stop Loss Finder.
All right.
And the script is very FID.
Okay. You should share that in the Telegram if you can.
Okay,
Can you do that for me?
I sure can.
Yeah, put that in there because I know we got some. Even if you like, I have a TradingView account. I trade on a smart trade, but there's certain things that I like on TradingView that I go to all the time, right? So definitely put that out there so people see it for sure. Thank you. But that's the and this is look everybody. This is what you can play on any time frame if you want to play these like that. So if you find 80-20s on the 1, right? If you find it on the 4, right? You can look this. Hey, this is what I'm looking for. I got my trend lines drawn accurately. I'm looking for that break. Now, when it happens, you got to take it. You got to stick to the process, right? Be addicted to the process. We live with the results. Okay, so that's that. That's on the Euro Swiss. So that 5 minute is too fast, right? Then that's what you can do. I think there's another one. Where was it that I spotted this week? 1 hour, right? So this is the one we played on the 1. Okay, we posted this one in the Telegram. Like, you see that there? Okay. All right. See how that's trying to push? See how you get that leg down? See how it's trying to break? Okay. This is a larger move. Now, you can say, hey, if I get a bullish look off of this and it closes, right? Give me something convincing, bullish candle. Boom, I'm taking it. Then look, you're on a 1 hour, so now it becomes a little bit wider, right? But it's still the same scenario, okay? Or, right, you may say, I got resistance here in this zone. Okay, maybe I want to just play this like that. However you do it, however conservative or aggressive you want to be, right? And then I look to play it, okay? Right, boom, like that. That to your target, okay? But I don't like playing the game. Like, if I get what I'm looking for, here's a bullish candlestick right here that rejected off that daily level 107.53, and it's pushing up. If I get something convincing, I'll put my stop below this low, and I'm just gonna rock with it. I got my risk management figured out. I'm dividing my risk by my stop, so my lot size is appropriate. So if I risk 1% on that, it's 1%. I have to lose 100 of these in a row to blow my account, to lose all my money. I have to be patient look at these 80-20s, and I have to lose 100 of them in a row to blow all my money. Think about what I just said, and then think about what some of us do, to include me back in the day, especially, right? Think about that. Okay, I'm waiting patiently. I'm scanning and navigating my charts, looking for these exact setups. To which, when I find it and I wait for my confirmation, I'm going to measure my risk 1%. It could be 2 at 2%. You got to lose 50 of them in a row. At 3%, you would have to lose about 33 in a row to lose all your money. The magic's in the math and the risk management, everybody. So look, if this breaks, if this gives me the bullish candle, look, I'm in, stop below the low. Even look, it could do everything, anything it wants to do, right? I don't care how it gets there. Just don't take my stop out. You can consolidate for 2 days. I don't care, right? Do not care. Just go to where I need you to go, right? And if not, I'm protected anyway at 1%. So if I'm playing on my lower time frames, especially, and I lose 4, 5, 6 trades in a row, like, man, I done lost 4 or 5 80-20s in a row. If I lost 5 in a row, I got 95 more setups that I'm going to trade, right? For one, you're going to find yourself trading far less because you're looking at for that one particular setup, right? You might get super picky, like, I needed to hit the 127. I'm not for all this. Maybe I'm for it with structure. Maybe not. You're going to build those rules out. But the only way you get to that point and that level of comfortability is if you do it, right? If you do it. Okay? So think about that. Like, how successful you can become if you operate with that type of patience and wait on your setups to occur in the market. Questions on that?
No.
No? All right. So hopefully it provides a little bit of clarity, right? There was another one. Oh, I think it was here. All right. On the 5, right? See this? You see that break? See how it's faint now? But hey, if I'm in there at a 2-to-1, that's what I'm trying to get. I'm out. Look at my break, right? Even here, look, you see how that took, I see how it consolidated and it broke out here with this candle. Put your stop below the low and run it, right? Run the play. Run the play. All right. So what's that? Where are we at? This is a 5-minute chart. So is this called 7, 8 pips? Yeah, 16 out of that. Okay. That's not even 2 or 382. I'm out before it even made this drop. Okay. See, I pushed beyond that level. But you know what? I was good. Why? Because I didn't get a trend line break. Right? Didn't get a trend line break. Then it consolidated. See? And just get consistent at it. It's been a lot of, so it's not a, there's been a lot of successful traders out there, especially when you talk about those World Cup trading championships or whatever it's called, when they have those crazy returns like 200% for the year, whatever, and they're in those championships. A lot of times they're looking for one pattern in the market. Notice I said one pattern, not necessarily one pair, one pattern. So it doesn't matter the pair. They're looking for that pattern, and that's how they make their money, and they're consistent at doing it. So if they have to wait, right, 3 days, 4 days, however long they have to wait, if they don't see that setup, they're not trading. Okay, and then oftentimes they use tighter stops, and they'll make a 200% return and only have a 40% winning percentage. Some people lower than that because of their risk to reward. So different frames of thought. Different frames of thought. And oftentimes it comes down to your trading psychology, your lifestyle, right? Maybe you look to get up. You get up at 5 in the morning or whatnot, 4 in the morning, and you look for, I'm looking for these swings on the 5-minute chart. And maybe that's my trade for the day. And I'm done, right? And you build your account like that. Depends on your lifestyle. Okay, maybe you're able to sit at your computer for New York Open around 8:30, and you got the crossover period between London and New York, and you get that volatility. And maybe you're looking for your 80-20 there, or whatever your setup is. Right? Some people, hey, I want to trade with the trend. I like 61.8. So that's your thing. That's cool too. Whatever. Right? Something for everybody in this group. And hey, I take that one trade. That's my 1 day trade, 1 or 2 trades a day, and that's me. That's what I'm gonna do. And you can make a career off of that. Okay, you might have different accounts. You might have one account where you trade longer swing type setups, and you look to compound that way. And then you might have one account where, hey, this is my day trading account. I'm in and out of these setups. All right, so things to think about. So this is let me see. So this is the new day right here. So this setup, look, this setup here was today. All right, you made that money today. All right, you're done. All right. Yeah, the dollar, that's $22. 50 cents, that's $11. That compounds, right? At a standard, same, look, your account grows either by you winning trades, right? Add more money to your account, however you got to get there. So think about it. Your process doesn't change, but as your account grows, your money changes, right? So at 50 cents, that's $11. At $1, that's $22. At $2, that's $44. At a standard, that's $220. And I'm done. You guys follow me on that? Drop me a 3 on the chat. Okay. So your process never changed. Right? Your process never changed. But your result, you got consistent with your process. That's the key. That's why we harp on that so much. All along, I'm risking 1% to gain 2%. I'm risking 1% to gain 3%. That's the game. I'm risking $1 for every 2 that I'm looking to gain. $1 for every 3 or 4 or whatnot. And you do the same thing over and over and over again until you reach your goals. That's it. And every last one of you on here can do it. Because it's something that I never thought I would learn how to do or even get involved in. Nobody in my family knows anything about this, but my kids will. Right? Furthest thing from my mind growing up, even as a younger adult. All right. Tell you guys a quick story. We wrap it up. So when I got out of college, I got in a house flipping. I used to live in Pittsburgh, right? And back during the Bush era, it was just like, man, you could get in and out of houses, flip, refinance. It was the Wild West, right? So the market was doomed to fail. But I'm young, 21, 22 years old, like had no clue about the markets like I do now. Anything, none of those economic indicators, right? So I'm steady in and out. Literally would get in the house, flip a property. I would use hard money loans. I was young, establishing credit. Hard money loans, they would give me the money, had a rehab crew. I would be in and out of the house 45 to 60 days. I totally refinanced out of that hard money loan, cashed out, have a renter in the property, right? So getting cash, building a good monthly income for myself. But then, so the mortgage company one day, and the guy told me, he said, broker, he said, look, you, and I look back on this now and I laugh, right? And he's like, you need to diversify. I'm like, like, what is he talking about? Diversify, right? You need to diversify. You should, right now, you should put money in gold. Now, I want you guys to think about the 07, 08 and what happened with gold prices, right? Went through the roof, right? But at that point, I'm young. I'm like, I'm not even working right now. Like, I'm living off the money that I'm getting from the rental income. I'm good. I got property. I don't know what you're talking about. Invest in gold, a gold chain. What are you talking about? I don't know. I don't clear. I just totally oblivious to the market and market conditions. But what he realized, right, is the market conditions were starting to change and everything was going to blow up soon, right? So when 07 and 08 hit, I got destroyed in the market. Properties gone. Was able to get away with the cash that I had, but I knew nothing about the markets at that time. Nothing. And I got blown up. But now I know exactly what the man was telling me. Right? He was telling me to diversify that portfolio. You need to hedge. You need to be prepared because something's coming. This is not going to last forever. Right? So had I taken, right, a percentage of that money that I was getting from flipping properties and put it in gold, I would have been good because the gold prices went through the roof. Right? Then I would have been able to take that money from that gold. And when the market bottomed out in 08, I would have been able to take that entire ride up until COVID. Pretty much. That's what we saw. You saw a slight correction in 18, but until COVID. Right? So when you talk about somebody that was the furthest away from the market that didn't have a clue about anything that was going on, a lot of money flowing through my fingers, right? Had no clue, but now I do, right? So that's how I know each and every one of you can learn how to do this. If I can learn how to do it, you can learn how to do it. Trust me, because this was definitely not my thing, right? At all. So think about that, right? Ryan always says, give yourself some grace, give yourself time. Your journey is your journey, right? Don't stop believing in yourself, right? Never stop doing that, all right? Because sometimes you all you got, and that's okay, all right? So any questions over anything that we went over this evening? I wanted to make sure that I got to those for our new people, someone that inboxed me about looking at those 80/20s on the 5 minute, right? It looks the same, just a little bit faster, but it's the same exact setup. All right, no questions?
No questions.
Ryan, what's going on, my man?
What's the deal, bro?
A whole lot, man. Always good to hear your
Great
voice.
session, man.
I appreciate it, man. What you got for us before we wrap it up? I gotta go get
Man.
the turkey ready.
Hey, I'm with you. I'm over at Mom Duke's house right now, prepping this dressing. Great session, bro. The thing that I'll add is to the point that you just made about betting on yourself. If you don't bet on yourself, who else would want to?
That's it.
Who else would want to? If you don't believe in yourself, if you don't believe that you can do it, whatever it is, who else is going to think you can? Right? So you got to bet on yourself. You gotta believe that you can learn whatever it is that you desire. And then you got to be willing to put in the work to follow. So that's it, bro. Phenomenal session. Happy holidays
Appreciate
to you
you.
guys. We greatly appreciate you guys. We're thankful for you guys. We're thankful for the time that you guys spend with us. And not only it's the opportunity that you guys provide for us to help you, right? And at the same time, we're learning as we do this too, right? So it's a mutual growth, and we're grateful for you guys for that.
Absolutely. Definitely great. So everybody, if you're celebrating Thanksgiving, happy Thanksgiving. I will be probably on the couch tomorrow about 3 o'clock, watching the lion destroy it, but I'll sleep my way through it. But we will be back on Saturday, bright and early, ready to rock and roll, charts all fresh, ready to move forward, to get ready to close out November as we move on into December. So with that being said, have a great evening, everybody, and a great Thursday and a great Friday, and we'll see you on Saturday. Good night.
You.
You're welcome.